Welcome, and in today's video we're going to be looking at the general journal of Nike for the month of February. And if you didn't know, this here is the format of a general journal. Now if this is your first time looking at a general journal, you definitely have to go look at a general ledger. Alright, general ledgers look like this. Okay, and they're very important to understand how we do the general journals because they're very connected. Now, if you do remember from that video, we had DAX on the debit side and LIC on the credit side. All right, this was our debit and this is our credit. And it was because of the accounting equation that says assets is equal to owner's equity plus liabilities. All right. But if we look at this, we remember DAX stood for drawings, assets, and expenses, and LIC stood for liabilities, income, and capital. Now, if we look at an example, all right, and we remember from our last video how we approached these types of things. And for instance, if we said Phil Knight, all right, who is the owner of Nike, and he wanted to start out the business in the very beginning. So he put 30,000 in the very beginning as capital to start the business. How would we record that in our general journal? Well, let's do this. First of all, it's very important to note that the amount goes over here, and we put 30,000 on the debit and 30,000 on the credit, but it's not always like this, and we'll see actually in the next example, but it's always debit and then credit, right? So it's always debit first. And then we have to put the account where we see details. So if he's contributing 30,000, our bank account of Nike is going to increase by 30,000 because that's an asset. So it's on the debit side because of DAX, and on the credit side because it's capital for the C in LIC. We're going to have capital over here, and that's going to be 30,000. And then we have to put information about the transaction. So over here we will say Phil Knight contributed 30,000 capital on the 1st of Feb. All right, and that is how we answer that question. That's how we enter a transaction into our general journal. Next example, we're going to have a little bit of something different. Let's say that Nike earns income, right? They earn income of, let's say, 60,000, all right? And 6,000 of the 60,000 was on credit. How would we then introduce this into the general journal? Well, let's see. So first of all, income of 60,000. So we know income is on the credit, so we can't transact that first. But we know our bank account is going to increase. So our bank account is going to increase. Now, how much is the bank account going to increase? Well, it's only 54,000. And the reason for this is if we take 60,000, we minus 6,000, we're going to get 54,000 because 6,000 was on credit and we didn't receive that on cash. So the second account is accounts receivable, otherwise known as our debtors, because they owe us this money because they paid on credit, and that is 6,000. And finally, we're going to have sales or income, and income is going to be on the credit side, and it's going to be for the total 60,000. All right, and again, we have this balance in our accounting equation like we had in the general ledgers. And then again, information about the transaction, we can say 60,000 sales, of which 6,000 were on credit. All right, perfect. Now we can do another example, all right? We're going to do a total of 4 examples. So we got 2 more left, right? And you guys are doing amazing. All right, so this next example says that 20,000 was owed by New Balance. So New Balance, all right, they were also up and coming, all right, and they owed 20,000 to Nike, all right, and it was paid off. How do we transact this? Well, first of all, our bank account is going to increase by how much? It's going to increase by 20,000. Again, the debt, the account that is debited goes first, which is bank, because it's an asset. Now, what is credited? They paid us this 20,000. We received it in cash. Their accounts receivable is credited because they are no longer a debtor. Now remember, a debtor is an asset. An asset being the fact that we expect future economic income to flow from them. So the accounts receivable is now going to be decreased. So our assets are going to be increased by 20,000 and at the same time decreased by 20,000, making the accounting equation balanced. And here we add the note that new balance paid off 20,000. Now you can obviously put your currency or whatever. Obviously in this example, we're trying to make it accessible and understandable for everyone, right? So you could put your currency, but you don't want to do that in the debit and the credit. Now, if we then go to this last example, which says that full night, all right, the owner, he bought a car, all right, for personal use. And let's say it cost 200,000. All right. And half he paid now and half later. How would we record this into Nike's general journal? Well, there would be no record of this, right? And that's very important to understand, that the general journal is for records of transactions that were done for Nike, all right? This is for full night, right? The owner, he bought the car using his own money. Now, however, if the question then said that he used the business's money, all right, for personal use, 200,000, personal use, using the bank account of Nike, then it is a different story. So let's see how we could record that. So obviously 200,000 would have to be debited somewhere. Now, how would we do this? Well, it would be drawings, right? It would be his drawings account. His drawings account would be debited. So drawings for the amount of 200,000. And the bank account, so owner's equity is going down and our assets are going down. All right. Balancing the accounting equation, 200,000. And it's obviously for his personal use. And then we can finally say full night, the owner, okay, used 200,000 cash from Nike's bank account to purchase a car for personal use. Now, however, if the car was now being used for Nike, that would then be an asset. All right, the car or vehicle would be a delivery vehicle or something like that, and therefore it can be used by the business as an asset to increase sales. And therefore, it would be completely different. We would say bank would still be credited, but the debit would be assets, because assets would be going up and it would be vehicles. All right, thank you so much for watching this video. I really hoped it helped you. Really hoped you understood what was going on. You guys are doing great. Stay happy, stay healthy.